because as I said, to go to a full-fledged gold standard, dollar for dollar, ruble for ruble, yuan for yuan, is close to impossible because the amount of gold needed.
So moving on, Gary, my broader point being that is gold currently or in the future about to make some sort of comeback as being used as a monetary metal, in the sense that it is being used as a currency, whether it be backed, whether we have, fiat currencies that are backed by gold, right? Which is what essentially what the Bretton Woods was, or we have actual just payments in the private sector made with gold or gold-backed tokens. There's a lot of talk about Bitcoin, for example, being used in our everyday transactions. I'm not seeing the same headlines with gold. Is that going to make a comeback anytime soon? And if not, why not?
I believe that would be hard to an impossible task. Realize that for hundreds of years here in the United States, we were on a modified gold standard. That was changed with Roosevelt when he confiscated all of the gold. Gold was sitting at around $20. A year later, he raised it to $35. But the reason he could do that is we were now the single largest holder of gold of any country in the world. It really maintained at that level up until World War II, then Bretton Woods, and then Nixon came in, I believe, 71, and dissolved that agreement. And the agreement was basically that other countries could turn in US dollars and receive gold for it. Now, can we go back to some kind of modified gold standard? Possibly, but an actual gold standard, I don't believe that there's any country that has the ability to back their currency dollar for dollar, let's say, with gold. That would take way too much gold if you look at what the amount of currency within the system. Mm-hmm. So I think that that's a fantasy that we can get a return to a gold standard per se by any country. In terms of a digital gold currency, again, it depends on the amount of currency that are digital coins that are released and having gold to back it. If it's paper gold, that's completely different than physical gold. And I think that that's a hard sell at best, to be honest.
Jeff, just one note, and I'll move on to some other topics. Yeah. Gold standard, you and I have talked about this before. A lot of gold investors I've talked to, gold bugs, if you want to use that moniker, they believe that a gold standard is not only necessary, but also on its way. Have you come across in your research any such murmurings from authorities, central banks, governments, that they're thinking of adopting a gold standard similar to what we already had in the past? And share your insights as to whether or not this may be necessary.
Yeah, I don't know any central bank that's talking about a gold standard. And one of the things to remember, like as Gary was talking about, in 1967 and the first 4 months of 1968, the United States was on a gold standard. You could, at that time, you could be a private entity as well as a central bank. You could bring dollars to a U.S. nationally chartered bank or to the Treasury directly. They literally had windows in the directory. You could bring your dollars in and exchange them for gold, physical gold, at $35 an ounce. And in 1967 and the first part of 1968, there was such a rush to buy gold at $35 an ounce, mostly by Europeans who had been allowed to own gold then for the first time since World War II. We lost like 75 or 80 million ounces of gold in a 15-month period. So that in April of 68, Lyndon Johnson closed the private sector gold window, and then Nixon closed the government central bank window in 71. So and central banks have a sense of history. So they say, okay, so let's say that I go to a gold standard and I make my currency convertible to gold. What's happened in the past? Well, in the 1960s, the US lost 60, 70 million ounces of gold, at a fixed price. Prior to that, there were runs on the Bank of England when they had a gold standard that was, where the pound sterling was convertible to gold. Prior to that, the Banque de France had a convertible franc, and they lost a lot of gold. So I think central banks look at it and say, no, that's not something. Then they go forward and they say, it doesn't make sense to us to have a gold standard. Now, in 2015, the Bank of China said, listen, from the 1940s, when the communist government took over China until 2015, we, the People's Bank of China, has always said that gold is a small and insignificant part of our monetary reserves. And we're changing our policies. We've actually bought some gold domestically. I think it was about 12 or 14 million ounces. We're adding that to our monetary reserves. And in the future, gold will be a small but significant part of our reserves.
Right.
So they've said, yeah, we think that diversifying our portfolio or our monetary reserves to include gold as well as other foreign currencies and move away from the dollar is important. But it's not like we're moving wholesale away from the dollar to gold. And if you look at monetary reserves, you still have 60% of the foreign exchange reserves held by central banks collectively in US dollars. So I don't know any central bank that's talking about using gold in a future monetary international currency regime.
Gary, there's this theory that should we have a gold standard, again, that would solve a lot of our inflation issues, that somehow anchoring a currency, any currency, to gold should, in theory, make the prices of that country, the domestic prices of that country, a little more stable. And people point to the fact that right after 1971, when Nixon took us off the gold standard, we had inflation in the double digits rise shortly after that for, a number of reasons, but still that may or may not have happened had Bretton Woods just been kept. What do you think?
Well, to me, the definition of fiat currency is currency not attached to any real asset. So absolutely, the fact that we have currencies that are backed by the faith in the government is quite different than what Jeff was just talking about, which was a gold or silver certificate that you could take in and redeem it for gold. As soon as you took currency and made them, in essence, worthless, they're backed by the government, they're backed by your faith in that government, you changed the dynamics of that currency. And once that box was opened, it can no longer be shut, so to speak, unless you would go back to some sort of modified gold standard. Because as I said, to go to a full-fledged gold standard, dollar for dollar, ruble for ruble, yuan for yuan, is close to impossible because the amount of gold needed. Now, the key right now is that by attaching a currency to an asset, such as gold or silver, limits the amount of currency that you can print. You can't print more than is covered by the asset, the underlying asset. And so, of course, that would give that currency more intrinsic value or give it intrinsic value, which I don't believe the fiat currencies have. And as long as we continue, I believe it's an experiment. Once we went off the gold standard, we don't know what the end game is yet. And I think that as I said, it's virtually impossible to close that box now that we've gone off of a gold standard to move back towards it.